Welcome everyone to the Kindle Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Don't forget to subscribe, like, and share these videos. Just want to thank everyone for coming to the WaveTech training yesterday. It was awesome having everybody online and being able to show how you're going to be able to manage your portfolios and come up with trading ideas with the WaveTech research tool and virtual portfolio manager. One other announcement before I get going tonight is there is a live stream at 1:30 Eastern Time on Wednesday. Make sure you bring plenty of stocks and other things you want me to cover. I get an opportunity to go into depth on a lot of different things that I can't do on my 12 and 15-minute videos. As we look back at yesterday's action, we saw a complete reversal from the previous day. We saw Monday's weakness get reversed, and it was grinding for most of the session. We were stable, and the NASDAQ traded lower for most of the session. In the last hour and a half, we started to see some short covering coming in, and then finally in the last 20 minutes, we saw the S&P move back toward the 3,200 level, finishing up 1.3%. The other thing that happened is we saw all 11 sectors in the S&P finish higher, with energy leading the way up 3.6%. And then also materials and industrials were positive as well. The interesting thing is the Dow Jones was the strongest market, up 2.13%, and all of the indices, though, performed much better than the NASDAQ. As I discussed in yesterday's video, and I want to continue to develop this dialogue that I started last night, is that my expectation is we're going to start to see a rotation a bit away from the high-tech stocks. They may not go down much, but there will be a leadership change with the S&P, possibly the mid-cap and small-cap stocks starting to overperform as we go forward. This has been a scenario that I've talked about over the past several weeks, that I continue to look to the small, mid-cap, at least some different leadership than just watching the NASDAQ go up day after day. So we're likely to see the NASDAQ stall and these other indexes start to play catch up. There's still a lot of hurdles in the S&P 500 to get over. I'll go through that here in a few minutes in the technical section. But as we look through the economic reports, they continue to come in better than expected. We saw CPI come in at 0.6. It was slightly better, but the Fed is only looking at these metrics from the standpoint that they're improving as the economy comes back online. Now today we're going to see industrial production come out. I don't think it'll be material, but I do expect to see it come in better than expected. As we go forward with the rest of the week, we're going to continue to be focused on the earnings reports that are coming out. They're fairly light, but there are some significant reports coming out that are likely to keep market sentiment positive. For the most part, the non-banking financial reports that we're seeing are doing better than expected. We saw Citi and Wells Fargo get hammered, while some of the other banks were able to perform well as their earnings came in better than expected. So the scenario that I've been painting for a while, that a lot of this stuff is priced in, the bad stuff is priced in, and if earnings do come out better than expected as we go into next week and beyond, then we're likely to see a continuation of this optimism grow. A quick mention, I continue to see all the stories that the so-called major institutional experts from the Goldmans and the like are saying that the V bottom is in question. Now it may be to become very unwilling to believe in the markets going higher, and it is hard because there is a detachment from what a lot of folks believe is going on with the fundamentals. And as I've been saying for a long time, it's the perception of the fundamentals, not the actual numbers that we see. The numbers that we saw coming out from March and April aren't going to look like that again. They're going to see a steady improvement. Now, can it get to a robust stage? Probably not. The sentiment should stay strong enough for the markets to continue to see some forward-looking positives, especially if there is more news to come out around the vaccine that we saw after the close today. It appears every time the markets get weak, there's a new vaccine story come out and the underlying bid shows up again. We're seeing that overnight as the S&P futures are up about 0.85%. Let's take a look at the charts to see what they're telling us for Wednesday's action. As we get into the technical section, I want to review the WaveTech database on a short-term basis. And we saw another 849 new buys in daily 1.2. We're basically flat in 3.2. The aggressive model continues to buy, which is interesting as the markets are beginning this rotation. In doing my analysis tonight, I realized that the rotation that we're seeing and looking at some of the stocks were in those small mid-cap in the new leadership. That's what we're starting to see unfold. Going over to the weekly database, it's currently at 59.6% bullish, which is one of the higher levels it gets to. It's likely to move towards the 68 to 74 level over the next several weeks, maybe as many as 6 weeks. But we're going to see a continued improvement as the database gets traction. And what that tells us is we're seeing more and more trends develop. Right now, there's 9,881 symbols long. Going back to the daily models, there is 12,560 short-term trending stocks at the moment. 75% of the market is in a positive directional mode. All this database gives us is the viewpoint of the general direction of the market, and we're seeing 60% of intermediate term trends are up and 75% on a short-term basis. Next, I want to look at some of the metrics. I've been discussing this new leadership change, and each one of these charts, the first one is the Dow Jones versus the NASDAQ. The second one is the S&P versus NASDAQ. Third one is the small cap, and the last one is the mid cap. And these are all on an intraday basis. As I switch it over to a daily trend, the spike that we saw across the board on all of these, and the mid cap and small cap have been starting this over the last couple of days. We're starting to see the evolution of this cycle. Now, this has not been confirmed yet. It's early on, but my expectations are that we'll continue to see this evolve over the next several weeks, and I'll be discussing this foreseeable future. Beginning with the S&P futures, we're looking at the monthly chart. We're going to do a top-down, or the longest term trend down to the shortest term. As we look at the configuration, it's interesting to note that on the monthly chart, we have just taken out Monday's action when it was higher, actually took out the last month's high. The previous month we were at 32.20. The high this month has been 32.26, so just by a little bit. As we review the market grid for the month, 3280 is still the number that I'm focused on, as I expect to see a minimum of 3280 hit and a possibility going 100 points higher above that to 3381. PPMs, the price pressure momentum, 0.82, 0.82, and 0.76. This is a very robust uptrend on a long-term basis. Going to the intermediate charts, and a market grid suggests for this week, 3210 is R1, 3246, 3281. There's that 3280 number again. I always talk about these clusters of numbers, so that's going to be substantial resistance at 3281. If we can't penetrate this number this week, it will be important that we manage to close above the 3210 level just to keep the momentum pointing to the upside. PPM 1 is at 0.95. It's actually faded a little bit. PPM 2 is negative, and PPM 3 is actually still accelerating, telling us that the underlying trends are still expanding. And by expanding, I mean they are still accelerating, suggesting the underlying bid on an intermediate basis will remain. Working our way to the daily chart now on the futures, the ranges for today is 32.21. The high overnight has been 32.16. If we can penetrate through that 32.21, then the next level is 32.42, 32.59 on an extreme today. I still believe that the earnings that are coming out are going to be the primary driver. We're going to continue to see more positive earnings from a viewpoint of expectations than what were expected before. As we review the NASDAQ futures, Overnight, we're seeing a 0.39 increase or 42 handles. The grid suggests that a move towards the R1, which is 10,729, is likely. Yesterday, we saw it dip below the 10-period moving average and then rebound sharply, and it appears that we're going to continue to trade in a range. And this is when I was talking about the spreads or the differential starting to change versus the S&P, Dow Jones, mid cap and small cap. This pattern is set up on the market grid. There's a wide trading band that is setting up that is going to keep us in this sideways choppy range. During this time, I expect to see an upward sloping S&P, the Dow Jones, and all the other indices continuing to be able to make some ground up, as I discussed just a few minutes ago. Going to the intermediate charts, as far as weekly expectations going, we've satisfied a lot of this. We did print up to 11,058 on the futures on Monday. Then we had the steep reversal. R1 is 10,971. That's going to be a resistance point. A penetration of that level could set us up for an R2, R3 move. My expectations are that we could see R2, which would be a slightly new high on the week. The current high is 11,058. The next market we're going to look at is the US dollar. What I'm seeing here is this drifting lower, but we're continuing to go toward what I believe will be the extreme. However, we're seeing some substantial downside momentum start to build with the PPM1 at a minus 3.8, which is in a downtrend. That suggests that the resistance at 97.8 will be the top end of the range if there is any rallies in this market. On the downside, support is between 96.04 and 95.75 with extreme at 95.50. Looks to me that we're going to continue to move toward that 200-week moving average. If it were to get through that level, that would spell trouble for the dollar. I will cover the implications of the dollar continuing down if we get through the 200-week moving average. The last market to cover tonight is gold. Gold continues to struggle to move sharply higher in this pattern. I've discussed this at great detail over the past several weeks. The weekly chart that we're looking at here still has a plus 0.52 on PPM1, PPM2 is a 0.40, and PPM3 is a 0.45. Everything is in trend mode, suggesting there's low probabilities for gold to decline under 1760. But having said that, the general trend is slightly up, and the resistance is up between 1824 and 1836. A close over 1836 on a weekly basis would set the tone for a move up into the 1880s, possibly going as high as 1900. I remain very bullish on gold. It's certainly a position you want to hold here. I believe this is a hedge for all the things that are going on the planet right now, especially with the markets recovering here. There's still a fair amount of money flowing into gold. The daily chart just confirms everything I said, with the exception of we're very close to seeing an acceleration on a short-term basis. So PPM1 plus 0.19, PPM2 0.20, and PPM3 0.07. Any number above 0.25 is going to tell us there is a trend. There is upward pressure right now, which is telling us there is an uptrend, but it's not a sharp acceleration that's going on. The grid right now, resistance is at 1818 R1, and then R2 and R3 are going up toward that range I just discussed on the weekly chart, and the RXT, or the extreme, projected today is 1833. It doesn't look like that's going to happen. On the downside, 1808, 1803 is major support. So we're going to remain in this very narrow sideways range. So this will complete the video for tonight. Don't forget the live cast at 1:30 Eastern Time. I'm looking forward to answering all your questions. Thanks again for watching.